So we've just heard Rishi Sunak's budget speech just over there in Westminster. In this video, we're going to deep dive into specifically what the budget actually means for UK property investors. My name is Ranjan Bhattacharya. I've been investing in property for 30 years. We regularly do a budget update to give a first reaction of what it means for property investors. So stay tuned for more videos. We put out new content each and every week. So make sure you subscribe, hit the bell icon, and also like, comment on what you think about what we're saying. So the Chancellor, of course, reiterated that we're in the worst recession for 300 years. We've had the largest government borrowing at any time outside wartime. But the good news is that the Office of Budget Responsibility does predict that we will be back. The economy will be bounced back, if you like, by mid-2022. So let's take a look at what exactly he's announced. On the job scene, the furlough scheme has been extended to October 2021, with some contributions required by employers if they're generating a certain amount of turnover. The living wage is going up to £8.91 from April 2022. There's a new apprenticeship scheme where the government will provide a £3,000 incentive to hire, and that will be without age limits as well, which may be interesting. This may be a lot better, hopefully, than the Kickstart scheme that was announced last year, which was not really that great for small businesses because you had to employ 30 people under this Kickstart scheme in one go, which meant the take-up for small businesses was very, very weak. For businesses, there are a whole bunch of grants that are going to be extended for trading businesses, but something that may be of interest is a new recovery loan scheme. Of course, we had the bounce back loan scheme and the C-bills, which are coming to an end, and this is going to be replaced by what they call a recovery loan scheme. This is going to be available to businesses of any size. From 25k to £10 million you'll be able to borrow, and this will of course have government guarantees for certain elements of these loans. Of course, more details of this scheme will be announced in the coming days. 100% business rates holiday until the end of June. That's carrying on with a 2/3 off business rates until the end of the year, which is not bad. And special moves for the hospitality industry, reduced rate of 5% VAT until 30th of September, and then 12.5% continuing from then on until next April 2022. Now on to housing. Exciting news on stamp duty and land tax. The 500k freebie threshold limit, if you like, has been extended until 30th of June. And there will be no cliff edge after 30th of June because there will be a nil rate band of £250,000 until the end of September. So there won't be normal rates of stamp duty, if you like, until 1st of October. So that's going to be a valuable boost to the housing market over the summer period. And the much leaked about 95% mortgage is going to be back. This will, of course, replace the Help to Buy scheme, which was really a Help to Sell scheme. And this allowed new build developers to sell new build properties to first-time buyers who only had to put up a 5% deposit. Now, of course, under this scheme, any first-time buyer looking to put down just 5% will be able to buy any type of property they like, whether it's new build or second-hand property. This won't be open to buy-to-let investors or anything like that. It's likely to be first-time buyers under the age of 40. This is an ideological thing from the Tories. They want to turn generation rent into generation buy, and this is basically Boris's version of what Margaret Thatcher did in the 1980s, encouraging or helping people to buy their own council houses. Now, Rishi Sunak interestingly confirmed that many of the nation's biggest lenders have already backed this scheme. Now, on to tax. I mean, the Tories did make a manifesto commitment not to increase income tax, VAT, and national insurance. They haven't done that. What they've done is they've kept the thresholds the same. So the bands, the income tax bands, those thresholds are frozen for this year. He did say that it'll get back to normal again next year, but for this year, those are frozen. Good news for people investing in commercial property using their SAS or SIP, there's no change to the lifetime pension pot allowance. Now on to corporation tax. Now this is of relevance to many property businesses, particularly those who have incorporated their property portfolios into limited companies. This has been trailed much in the media. What he's decided to do, he's announced an increasing of corporation tax to 25%. But this ain't going to happen now. This is going to happen April 2023. There are some interesting ifs and buts. He's said that companies which make a profit of less than £50,000 will still pay the 19% corporation tax rate, and it's going to taper. So it's going to taper between £50,000 and £250,000 in terms of the rate that you actually pay, and the maximum 25% will be payable by companies making a profit of more than £250,000 after April 2023. Now, he didn't say this in the budget, but it's likely that if you have 3 companies and they're all making £100,000 profits, then they will add them all together to decide what your corporation tax payable will be. So it's unlikely you'll be able to split yourself up into a multitude of companies to benefit from the lower rate. Rishi announced something very interesting on losses. If you've made a loss in this tax year because of coronavirus or what have you, then you can carry back losses of up to £2 million over the last 3 years, which will of course be a considerable help to cash flow for businesses which have made losses during coronavirus and are recovering now. They've announced what they call a super deduction to encourage businesses to invest their cash in their business. Now, they haven't actually said what investment actually qualifies. I mean, typically this would be plant and machinery, say, in a factory. But they haven't said exactly what the scope is or what the range of investment will qualify for this super deduction. But you'll be able to claim back 130%, yes, 130% of that investment back against your taxes. This has never been tried in the UK. They've done 100% deductions before, but never 130%. So we'll have to see what the ifs and buts are about that one. And for some reason, the government have decided to start a bank. They're going to fund it to the tune of £12 billion to invest in public and private infrastructure projects. God knows what that's going to be about, but I'm not sure whether that's a great idea. We've had Eat Out to Help Out, but now the government have announced something called Help to Grow. This is a whole package of measures to allow business owners to get trained and directors to get trained. So we'll have to see what that is actually going to offer. And for Brexit, they've announced Freeports. Now, of course, we had things like Freeports and enterprise development zones in the 1980s, but Britain was restricted from having such things under EU law. Now that we've left the EU, they're bringing those back, and those will allow quite exciting free trade areas which allow for businesses to do a lot more with a lot less red tape and a lot less tax. So that will be interesting. We'll have to see what the detail is on that particular announcement on Freeports. Now, what's not in the budget is any changes to the capital gains tax regime. You'll remember this was widely talked about in the press in the run-up to the budget, and this hasn't happened. It's not the right time to change the capital gains tax regime. But I think what the government have done is that they've put the discussion on the table, and they've indicated a direction of travel. So if, for example, you're a property investor and you've got properties in your own name and you haven't incorporated them into the company, this is something that you need to think about. You need to think about how you can address the capital gains tax issue now, certainly before the next budget. And we've got some videos that we've done on this subject which will help you out. So to summarise then, for property investors, no change to capital gains tax for individuals, SDLT extended until 30th of June, then not falling off a cliff edge then. There's a middle band of 250 grand until September before it returns to normal. There's a new 95% mortgage available to first-time buyers to buy any property they like. So good news for the property market. And of course, good news because booze and petrol remains the same. Now, my final thought is this. There has been record amount of borrowing. Rishi Sunak said in his speech that there's £355 billion borrowed just this year. And all of this will have to be paid back, and it will have to be paid back by taxes. Now, everyone agrees taxes should go up, or needs to go up to cover this level of borrowing. But the thing is, whoever you ask, they believe that someone else should be the one who has to pay that tax. And on that, let me leave you with this final thought. We're living in a democracy, and democracy is best described as three cannibals and a vegetarian deciding on what to have for lunch. On that note, subscribe, hit the bell icon, like, comment, and see you guys in the next video. And on that, let me leave you with this final thought. We're living in a democracy, and democracy is best described as three cannibals and a vegetarian deciding on what to have for lunch.